All right, the next part of chapter 2 that I want to look at is really looking at, starts with the journal itself. So the journal is a book of original entry. It is listed in chronological order, which means that January 1st comes, then January 2nd, then January 3rd, and that's how the journal is actually listed, is by date. When we look at journalizing, what journalizing is entering transaction data into the journal. So it's really just going in and recording that data. The things that you have to have when you journalize an entry: the date, the accounts that you're going to debit and credit, the amount of the debit, as well as the amount of the credit. You also can have an explanation on those journal entries as well. When we look at journal entries, this is really how your general journal is set up, where you have a date, then you have the account or explanation, you have a reference block, then you have a debit column, then you have the credit column. So if I look at a particular entry, such as the owner contributed $1,000 to the business, in this one, what we're looking at, and I'm just going to say that this happened on 8/1. So what we're looking at is that on 8/1, we are going to have a journal entry. And the journal entry that we are going to have is that the owner contributed cash to this company. So I'm going to have the cash there. The other part of it is, since the owner contributed it, that is going to be the capital account. Now remember, when we do these entries, that we do have to indent that credit account. Now we're not going to use the reference column right now, so we're going to skip over the reference column and we're going to go in and put the amounts. So we would have 1,000 is going to be our debit amount for cash, and for capital we're going to have $1,000 as our credit amount. And so this is what the actual journal entry would look like whenever you are doing that journal entry. The next thing that we look at is, or the next thing that I really want to look at, is what we call posting. Now, when we post our entries, there are really two steps involved with the posting. Now, we are going to post to T accounts in this particular lesson, and you can post to T accounts when it comes time for your test, because they are easier to use. Now, when we do our project, we actually will be posting to the general ledger. And so it's done a little bit differently, but for purposes to make things quick and easy, we actually use T accounts. And you will notice that these T accounts actually look like, a great big T. Is really what we're looking at there, and that's why they're called T accounts. Whenever we get ready to post, we go to the very first entry. And so what we have here is on 8/1, we had debited cash. So we look at cash, we look at the debit amount, and so we find cash, and we are going to come down to our ledger, and we're going to put the $1,000 in that debit column. This is account 101, so what we're going to do is we're going to come up and we're going to put that account number in the reference column. That lets us know where we have posted it. We then go down to the next one, and we have the capital account, which was a credit for 1,000. So we'll come in and we will do the credit for 1,000, and that's account 301. So we would come up and put 301 in that area. The next one is rent expense. Now, rent expense is a debit, so we would put that debit in. And let's just say that, that was done on 8/1 also. That is account 601, so we would need to put 601 as that account number. Then we get to cash for a credit of 500. So we'll go to cash. On the credit side, we will put 500. That is account 101, so we would put that in there. Then we get to the third, and we're actually going to receive $800 in. So we have cash debit of 800. So I would come in and put the 800 in. That is account 101. Oops. Not sure what's going on here. The next one is the service revenue, and that is a credit for 800. So we would go in and put that credit in. That's account 401, so we would put that in the reference column. When we finish with all of our entries and we finish posting all of our entries, what we will do then is we would actually go in and we would balance our accounts. And so by balancing these accounts, we would take this cash, and the debit side would have 1,800. The credit side would have 500. The capital is already balanced out, the revenue is already balanced out, and the rent expense is balanced out. Now, we are have not completed this account because what we have to do, is we have one more step. So what I'm going to do is move to the next slide and really show you what we're going to do with this cash account. So with this T account, what we had is we had 1,000, we had 500, we had 800. So what I had done just a moment ago is I'd said, okay, we had 1,800 on the debit side, we have 500 on the credit side. Now what I need to do is I need to balance these two. Whenever I have an amount on the debit and the credit side, I have to subtract the two numbers. So when I subtract these two numbers, I'm going to end up with 1,300. Now the number is going to go on the side that is the biggest. So since 1,800 is bigger than 500, it will go on this debit side as far as this particular account is concerned. And so that's really what your cash account is going to look like when we're trying to go through. You would do the same thing for all of the accounts, and you're going to balance out all of the accounts. The next part of this that you can look at is going to be preparing that trial balance. Now, when you prepare a trial balance, it is considered to be one of those statements that you're going to be looking at. So it is going to have a header. And with all statements, what you're going to have in a header is you are going to list out the company name. You would then list the statement name, and in this case, when I look at that statement, that would be trial balance. And for the trial balance, you would just list whatever date you were looking at. And so this one, what I'm going to do is I'm going to say, okay, what if it was ABC Company? This is a trial balance. And the last entry I had was on the 3rd of August. So I'm going to put August 3rd, 2016 as the date. So what we're looking at here is what your header should look like. So that is what a header would look like on the actual trial balance. It is for 1 day in time. So you want to make sure that when you do this, you are just looking at one date and you're not looking at multiple items there. So when we go in and we look at this, what you're going to find as far as that trial balance is concerned. So again, it's ABC. It's going to be a trial balance as of August 3rd. And so what I would do is on a trial balance, I would list all of the accounts. I then would list the debit and the credit. So the first account that we have is that cash account. Now if we go back and look at it, the cash account was for $1,300 on that debit side. So I'm going to come in here and I'm going to put that $1,300 as a debit. Notice I began this with a dollar sign. So my columns should begin with dollar signs. When I go back and I look, the capital account is the next one, and it has a $1,000. If you look here, $1,000 is what we have on the credit side. So I would come in and I would put capital, and I would do 1,000 for that credit. Again, I'm beginning a column, so I have a dollar sign. If I move back, the next one is the service revenue for $800. So I would come back over, I would have service revenue, $800. And then to go back to it, I would have $500 as a debit to rent expense. So when I come back over here, I'm going to have rent expense, and it's going to be for $500 as a debit. So I do that for every account in my ledger, and then what I'm going to do is I'm actually going to total these amounts up. So when I total these amounts up, what I get on this side is going to be $1,800. Since I'm doing a total, I'm going to put a dollar sign. I also have, when I total this side, I have $1,800. This is a statement. When I'm finished with the statement, I will double underline. Now this double underline that I'm looking at lets me know that I am finished with this statement. So in this process of what this chapter is looking at, first you have to go through and you need to journalize all of your transactions. Then you are going to have to post transactions to the T account and come up with their balances. And the final thing that you would do after you find their balance is actually prepare a trial balance. So these are all the things that you're going to be doing in chapter 2.